Chapter 11. Preparing 1099, W-2, and W-4 forms for your business. Get payroll right, and you protect cash flow, compliance, and trust. Today, W-4 and W-2 essentials. A 1099 reports non-employee income paid by your business. Common types: 1099 NEC, 1099 EMISC, 1099 DIV, and 1099 INT. 1099 NEC reports $600 or more paid to independent contractors. Rents, prizes, and other income may appear on 1099 MISC. Dividends use 1099 DIV. Interest uses 1099 INT. Always collect a W-9 to obtain the contractor's tax identification number before paying. Issue a 1099 when total payments reach $600 or more. Maintain invoices, contracts, and receipts for accurate records. Verify legal names and TINs to avoid mismatches and penalties. Send recipient and IRS copies by the listed IRS deadlines. Paper and electronic timelines differ, so plan ahead. Lock in a monthly review to stay ready for year-end. The W-4 instructs how much federal income tax to withhold. Complete it at hire or when life and income change. Step 1. Captures personal information and filing status. Use the multiple jobs guidance if you hold more than one job or your spouse works. Claim eligible dependents when income fits the IRS thresholds. Adjust for other income, deductions, or any extra withholding. Sign and date to validate the form. Verify identity data to prevent reporting errors. Encourage employees to use an estimator for accuracy. Integrate HR and payroll to keep withholding settings aligned. Store W-4s securely with restricted access. Prompt updates after life events to avoid under or over withholding. Accurate, current, secure. Your W-4 checklist. Keep meticulous records. Invoices, contracts, and receipts. Pay on time to sustain trust with contractors. Use clear contracts for scope, terms, and deliverables. Leverage software to streamline payouts and reduce errors. Monitor tax rules and stay compliant to avoid penalties. The W-2 reports annual wages and taxes withheld for each employee. Provide copies to employees and file with the SSA and relevant tax agencies. Distribute employee copies by the posted deadline. Calculate total wages, tips, and all withheld taxes accurately. Submit copy A to the SSA and meet all local requirements. Accuracy and organization reduce costly corrections. Box 1, wages, tips, and other compensation. Box 2, federal income tax withheld. Boxes 3 and 4, Social Security wages and tax. Boxes 5 and 6, Medicare wages and tax. Box 12 covers certain benefits and deductions such as retirement contributions. Review all math, names, and SSNs before filing. Payroll services calculate wages, withhold taxes, and file W-2s. HR tools centralize employee data, benefits, and compliance. Automation lowers errors and speeds up year-end. Use dashboards to monitor liabilities and deadlines. Compliance is a system, not a scramble. Post roles and screen applicants to find the right fit. Onboard with training and complete all required paperwork. Process payroll, withhold proper taxes, and pay on time. Administer health, retirement, and time off benefits. Stay aligned with labor laws, tax rules, and policies. Coach performance and document reviews consistently. This video is the intellectual property of Jacqueline Enterprise Inc. For more details to help you scale your corporate growth, go to Amazon.com today and order several copies of Easy Corporate Comprehensive Curriculum for New Businesses. Click the link in the comments to register for the course. Use the right form, follow deadlines, and systematize compliance. Build your processes now and growth will follow. Subscribe for the next chapter in the Easy Corporate series.
corporate tax strategies and financial positioning for new business owners. That's what we're going to be talking about in this particular module. We're talking about understanding that the CEOs who win are the CEOs who plan. And we're talking about tax planning. So, the reason for this entire presentation is because I see a lot of you making money, generating quite a bit of revenue in your space, in your industry, and that's great. But what you want to understand before tax time is how to strategize to be prepared for your tax reporting. We're not just talking about federal and state withholding. We're talking about your federal tax returns for your corporation. We're talking about that form that we filed, that 1120, for our tax reporting. So most businesses, specifically business owners, they don't fall or fail because they lack talent. They typically fail because they lack strategy. The IRS has a plan. The banks, they have a plan. Corporations that are dominating your industry, they have a plan. My question to you is, do you have a plan? So that's what we're going to talk about. We're going to talk about making sure that in the middle of you creating and generating revenue, which I am very proud to see you guys do, I need you to understand that every step of the way, you need to be preparing. You don't need to wait until the last minute. And of course, you know that corporate tax returns are filed March 15th, on or before March 15th of each year. That's corporate tax returns, right? I need you to understand how to file those. And also, you need to understand, even when you file your personal tax returns, that there are some things that you can write off in your personal tax returns because you are an independent contractor in some cases and a business owner in others. Not just any business owner, but a C corporation CEO. All right, so this module is going to teach you how to think like a corporate executive, how to structure like a corporation with structure in an executive mindset, ways that will protect your business like corporate executives do. We're going to start you with tax strategy. So in looking at tax strategy, it's not a once a year event. No, it's something that you do every month, 12 months out of every year. You exercise corporate discipline. Yeah, this is going to determine whether your business grows or whether it stalls or whether it collapses under the things that could be preventable as far as financial pressure is concerned. In this module, you'll learn how corporations like yours legally reduce tax liability. You can protect your cash flow and position yourself for long-term financial strength. What you're going to learn is how to align your business structure with operations and documentation with the IRS expectations so your company remains audit ready, compliant, and strategically in a position of advantage. Now, this is not tax preparation in terms of me teaching you anything about taxes because I'm not licensed in that area. But I do know how to prepare as a corporation to succeed strategically with your taxes. So though this is not tax preparation, this is tax positioning. I'm teaching you how to position regarding your taxes. This is going to be one of the most powerful tools that you're going to use in your corporate management. And this is actually a part of the corporate management services book. But I'm teaching it to you now because you need it and you need to know how to operate in it. And this is not the first time that I've taught this. But in this case, I've added a PowerPoint, a module that's going to help you guys. And it has some, I'm looking at it now to make sure that it's got the exam questions in it that we're looking for. That's going to be important for you guys. And I put the exam questions in there, and then I have you to answer them audibly, verbally. because I want to make sure that you understand the information. And the only way that I can know that you know is when you apply it through answering the questions. Okay. So I've got those questions in there. So let me go on with this. First thing I want to do is make sure that you understand about tax positioning, specifically corporate tax positioning. So when we talk about corporate tax positioning, we are remembering that there are some strategies that you can legally use because you're a C corporation. It's a process of organizing your business activities, your financial decisions, and your documentation in a way that minimizes tax exposure. And it's going to maximize the allowable deductions. So, unlike traditional small business thinking, corporations plan their tax outcomes before the year begins. So, we're looking at things like proactive planning, not reactive. And that reminds me of something, and it's off topic. Proactive is when if you're looking to be a vendor for the state or for the government, you go into the site, the vendor's portal, and you look at pre-solicitations in the industry, in the services in which you provide. That's so when the solicitation actually goes out, it's not a last minute thing for you. All right. Well, this is the same thing. It's being proactive instead of reactive. So when you are looking at documentation discipline, you want to support every deduction that you're going to have. And you do that with documentation. Strategic timing of expenses and investments and income, vitally important. Leveraging IRS approved corporate advantages and maintaining audit ready compliance. Those things are what you need to do. So you would start at the beginning of your year, actually before the year begins, setting up particular accounts. So if you have a little one that you're going to be investing in their education, whether they're your child or some child that you're investing in, you would want to get the Alabama 529 fund, because you can get a write-off for having that. Yeah, it's you investing in the education set aside that Alabama has. There's also some development opportunities that the states will allow, and municipal bonds, because that helps them to provide for what's necessary by way of construction for the state. You can do that in any state that you're in. Yeah, each one of the states have a particular bond that they will allow you to invest in terms of a municipal bond, but they also have educational resources that you can use to set aside for the sake of someone's education, and at the same time it provides a write-off for you. Things like these are things that help you to understand these principles, so you stop operating like a hustler and start operating like a CEO. When we look at current corporate tax strategies, I'm talking about current, that would be 2025 through 2026. Yeah. And so when we look at some of the tax strategies, we're looking at things that align with the IRS guidelines, with the Treasury priorities, and also things that are involving regulatory environment. Those are the things that we're looking at. All right. So when we're looking at full expensing, all right. So when we start doing research and development, and you have to do that in some cases. And I want to just remind you, it just came to my mind. I keep, every time I'm doing a recording, in the back of my mind, I hear this voice saying, remind them that they all need to calculate and determine what their market share is. So I'm going to say it to you, even though it's off topic. If you have not determined what your market share is for your industry, for your particular, not just your industry, but your particular company in this location, whatever location that you're in, you need to determine your market share. And if you have not learned to do that yet, there are several modules that I have inside the podcast that teach you how to determine your market share. All right. You want to find those and listen to those. Okay. Just wanted to point that out. All right, so there are certain things that we can deduct 100% for, in terms of if it qualifies for domestic research and development expenses. For example, if you're working on your AI development of your company, that is a write-off. All right. And let me tell you what I mean by that. Okay. So for our company, in our industry, we are setting up an automatic automation of our intake so that there will be AI programming that will go in, several different programs working in tandem that will go in and withdraw and extract certain information so that they can do our intake. They're going to pull it from our email, like orders, and they're going to set the orders up in our AR, and then they'll go in and they'll pull the intake information, the specific tax information, and the deed information, everything that we need to start our report. That is what we're programming and developing right now. It's going to reduce our turn time and allow us the opportunity to be able to service more order allocations from our clients. All right, that's AI development, and it qualifies for 100%, deduction. Software creation, yeah. That could be your CRM that you create from your AR. Any type of process of improvement or product development or technology or upgrades in your technology, those things can be written off. This strategy improves your cash flow and it reduces your taxable income immediately. Okay. Another thing, let's look at your capital structure. If we want to optimize there, then let's look at a strategy for balanced debt and equity to maximize the interest deductible and minimize the tax exposure. Okay, so if we're looking at interest expense and the limits, then you want to evaluate your interest expense and look at those limits, right? You can now write off the interest for automobiles. That was it used to be only mortgage loans, but you can do it for automobiles. So if you're using those automobiles for the corporation, that is an expense of interest that you can write off. Yeah. All right. So you also want to look at when you are spending certain capital, when you are having expenditures. So that because the timing of the year can maximize in the amount of deductions. Yeah. And it's going to lessen the impact of what you're spending. That's right. All right. And we'll talk more about that. One thing that we want to look at is the tax advantage that you have for your workforce. Right. Right. So corporations use retirement plans incentives to reduce taxes, and they can strengthen their employee retention in that way because you offer retirement programs, and it's easy to do through companies like ADP. They actually have assistance programs or companies that they partner with in order to establish retirement benefits for your employees. Right. So as a small employer, and retirement plan credits can enhance your write-offs because you can write those off. And it could just be for you, but you're an employee. Yeah. So you can write that off. And off camera, I have some suggestions for you that I'd be more than happy to send you of companies that can help you set up that retirement plan for your company. Or you could go through companies like ADP and they'll help you set it up. All they're going to do is outsource to some of the companies that I would suggest to you that you can go directly to. Right. hmm let's see some other things. Let's see. Now we can talk about that, but that's going to be lengthy. Now I can tell you, you want to research tax advantage workforce investment. The retirement plan is one of them. EAP programs, employee assistance programs, that's another one. But the retirement plan is heavy in write-offs for you. Okay. Also, when you're looking at you want to implement internal controls, tracking, digital assistance in different transactions that you have, and the preparing of expanding your reporting requirements. So the more you use your general ledger, the more you use that general ledger, the more it's going to be counted as a digital asset. Matter of fact, it'll be counted as digital asset compliance and risk management, and you can also write off that cost. This reduces audit risk and it positions the company for future regulatory clarity. That's right. Another thing you want to look at, multi-state and global tax positioning. I've just talked to you about that when I talked to you about particular municipal bonds. State municipal bonds, not necessarily just for your state, but in other areas. State developmental opportunities that you can invest in some of the development that's going on in the particular states, and you can get a write-off for that. So as your business is expanding, you can begin to utilize state level corporate tax obligations, like what I just talked about. Yeah. There's some other incentives there too, but I want to watch the way I present it to you, because you know, you have to present it carefully or it could backfire. So I'm making sure that I choose my language carefully. But what I want to make sure that you understand is how to position yourself so that you can be audit ready. You want your corporate documentation to be in order. I can speak on this with liberty. You want to maintain strict documentation standards to support every deduction and protect the company during audit. So for instance, corporate minutes, you want to keep them up to date. Everything that you know that you're going to write off, you need to put that in your corporate. If you're going to make certain moves, large moves, that will help write off certain expenses and write off certain income that you have, you need to put that in your corporate minutes so that it's already set up as a part of your company's standard of operations. Any operating agreements that you may have that hope to offset some revenue that may be coming in, you want to put that inside of your corporate kit. Any board resolutions that you have that's going to help reduce and help the company to be able to deduct certain things and write off certain things and be given more credits, put that in your minutes. Yeah. Anything that's in expense, you want to substantiate it in some way to be able to write it off, but you keep a record of that and you can keep it in your minutes. Any kind of research and development that you have been doing, right? And by way of anything AI or digital to increase the development of your company, keep a record of that documentation. And you can keep that again in your corporate kit. Any digital asset logs, like what we just talked about, the general ledger, you want to keep that. Keep that. Very important. And then if you have a payroll contract, somebody that you contract to do your payroll, and they're going to do it with compliance, you want to make sure that you keep a record of all of that. Yeah. And even if you're going to have 1099 independent contractors, you want to make sure that you keep a record of all of that, because a lot of these things you can write off. You don't even have to count that as income. You can write that off. You can deduct it because you're paying it out to somebody else, but you got to have specific records. You can't just be paying somebody across the table. You got to have specific. In Cash App, it's not enough documentation. You need a 1099 in place. You need a W-9 in place. Yeah. And if you have engaged in a retirement plan for you or your employees, then you need to have that documentation audit ready and available. Yeah. All right. So that's just a few tax strategies. And those are things that you have to start at the beginning of the year, actually before the beginning of the year, so that it's already set up at the time that you start. You guys already have the Easy Corporate Comprehensive Curriculum for New Business Owners, but I'm still going to suggest that if you don't have a copy, that you get a copy. of the Easy Corporate Comprehensive Curriculum for New Business Owners. Now, I'm thinking that if you're watching this, you have a copy or you intend to get a copy. Easy Corporate Comprehensive Curriculum for New Business Owners. Now, I just want to say this also. You want to pick up a copy of the second edition. It's called Easy Corporate Comprehensive Management, and it'll be available June 19th, 2026 on Amazon.com. Now, another book that you want to get that's going to save you in interest and a variation of ways is this book, Homeownership Pre-Planning and Much, Much More. It's actually purchase power for business owners. And when you get it, you'll see why. Go ahead and enroll in the Easy Corporate Comprehensive course if you haven't already done that. Join the Easy Corporate School community and invite others that you know that are interested in becoming business owners and becoming CEO, executive. Send that link to them to invite them. It's not free for me, but it is free to you. I make sure that it's free to you all so that you can benefit everything that's there. Go into the classroom, peruse the classroom, see the things that are there. And then when you see these videos, this training, like and subscribe if you haven't already. Share it with others, with other entrepreneurs that are seeking to grow. Yeah, that's going to help you grow because it's a gesture that automatically creates room for you to grow. All right. So when we're talking about corporate tax strategies for 2025, 2026, and now we're moving into 2027, what we're looking at is you can use this, the IRS and Treasury's priority guidance plan. They have a priority guidance plan, and it outlines 105 high priority projects that you can focus on implementing. Yeah. It's a part of the Big Beautiful Act. Yeah. The Big Beautiful Act. The One Big Beautiful Act. OBBBA. Yeah. Certain deregulations and digital asset compliance. Tribal tax issues. The Secure 2.0 retirement reforms. All of these are signals that shift towards streamlining and being able to be in compliance and reduce your administrative tax burdens. That's why I want you to get, and I'm going to put a link inside of this so that you can see it and benefit from it, okay? All right, so, but you definitely want to look into that One Big Beautiful Bill Act, OBBBA. You want to look into that. That's going to help you in from 2025 through 2027. You want to look at that. That's really important. The reason why you want to do it is because there are a lot of tax benefits in there. Yeah. And so what's happening is that tax planning can help restore full expensing of domestic R&D. That's research and development costs. I keep saying that because things are moving in a specific way now. And those of us who are increasing our growth and the way that industries are moving, you're going to be able to write those things off. So reversing prior requirements for capitalization and amortization research expenses, this allows corporations to immediately deduct qualifying. You don't have to wait over a period of time for depreciation. You can write it off now, qualifying research and development investments and improving your cash flow, reducing taxable income in the year that cost is incurred. So business is investing in product development, AI, process improvement, technology upgrades can accelerate deductions. And what you want to do is file form 3115. File 3115. That's going to adjust certain accounting methods so you can reevaluate any prior year's research and development as well. So this creates a powerful opportunity for you as a corporation to front load deductions, and then you can go back and strengthen certain things that you've done in the past in terms of growth. Yeah, I want to make sure I go over that with you. All right, so The next thing I want to go to, and I'm doing this really quickly because I'm doing it quickly, but I also want to be thorough. I want to be very thorough so that, and when I say thorough, I just want to give you enough so that you can go and do your own research and look into it. The main thing is, I see you guys making money, and I want to make sure that you understand that you got to start preparing now to write that stuff off. You got to start preparing when? Now to write that stuff off. I'm going to say it again. You got to start preparing when? Now to write that stuff off. And I'm even talking about your plans for next year. Yeah. That's something that you got to stay focused on. Yeah. And then there's some things that you can also look at in terms of front loading deductions, and you can strengthen your earnings before interest and taxes and depreciation. Yeah. Very important matrix that you want to use. All right. So, let's see. I could talk about your cash flow optimization. Let's see. I'm going to move forward to innovation in AI development and technology-driven tax advantages. All right, so the IRS is acknowledging that businesses are now increasing their integration of AI and automation. Okay, and so the current tax planning framework encourages the leveraging of technology investments for operational efficiency and tax benefits. So under this big beautiful act, companies can deduct any kind of domestic research and development that's tied to AI development, machine learning, digital transformation initiatives. All of those things can be written off. You can deduct them. This is going to create a dual advantage for you because, again, it's going to reduce your tax liability and it's going to help you modernize your operations. So now you don't have an excuse for not being able to afford it because you can write it off. Yeah. Yeah. You can document qualifying activities and maintain audit-ready documentation to substantiate. And you can coordinate tax strategies with technology and roadmaps to ensure that you're maximizing in your deductions. So let me it's a lot to talk about here. And I'm not going to use up a lot of time with this, but I just got to make sure that you understood. Hey, check yourself. You are making money, and that's great. But every time you make money, you need to have a tax strategy for writing off most of it. Now, it is true that when you go to apply for things with your company, they are going to be looking at your net income to qualify you. Banks will. But there are other entities that will loan to you based on your overall incoming revenue, right? So you want to understand that. And people who are going to be investing and purchasing stock in your company, completing a subscription in your PPM, they're going to be looking at your overall income. It's only banks that look at your net income. So don't be afraid to write off as much as you can, because we teach you a variation of ways to raise capital. So let me just give you an idea of what it is that we're doing, that we have been doing for a while in terms of tax strategy, but we've added some things since this big, beautiful plan act has come out. All right. So here's what's important. I want to make sure you understand our purpose for our company, and you have to determine what yours is to strengthen corporate positioning, to reduce tax exposure, and maximize strategic financial advantage. That's our purpose for our company. All right. So when you look at this, our company, Public Research Inc., is an abstracting company. It's also a title agency, right? We operate at the intersection of corporate education, real estate intelligence, and strategic business development. All right. Because I personally am an incubator. So my company, Jacqueline Enterprise Inc., we are accelerators and business incubators. So because our company functions as both a knowledge-based enterprise and a service-driven corporation with some type of consultation involved, our strategy has to protect intellectual capital, and then we have to optimize our operational deductions, right? With some of that research and development, so we can position ourselves for scalable growth. So that's our plan. That's how we work. Firstly we we put each one of our what it is that we do in different divisions. We create compartments and divisions for what it is that we do. First thing, all right, so that we can then begin to write off and be proactive about our strategy for each form of revenue that we have coming in. That's the first thing, right? And you heard me talk about how it's broken up into segments: business development, real estate intelligence, corporate education. Yeah, all of those things are in there. All right, so that's all of the variation of revenue. Not to be the intellectual property includes books, it includes recordings, it includes all types of illustrations, a variation of things that we do, and so that we have revenue coming in. All right. So now when we're looking at our priorities, we want to make sure that we have a full expensing of research and curriculum development, yeah, and digital assets, because we can write it all off. That's right, down to the software that's used for all of it. So the curriculum development for Easy Corporate Comprehensive Curriculum, we can write it off. Under current US IRS guidance, corporations may fully expense qualifying domestic research and development activities. So for all of those under Public Research Inc., we can do that for those courses and for those books and for that curriculum. But we can also do it for the incubator company. Yeah. Under Easy Corporate Comprehensive Curriculum. And that is under Jacqueline Enterprise Inc. Yeah. So any digital course creation, we can write it off. Any AI assisted content or development, we can write it off. Like those videos that you see in the podcast. Yeah. Those that we are AI engineered. We wrote the script for them. We put together the characters and the images and the sound and the music. And we dropped it into the AI system, and it developed it. We can write that off, the cost of that. Software for automation. Remember the automation that I told you that we're setting up through AI? We can write that off. Research for corporate training modules. We can write that off. And so before we even start, we set up records and we set up documentation. And we also set up just straight cost of goods and services inside of our general ledger and receipts. We still do that. Yeah. All right. So let's see. I'm going to cover just a few more things and then I'm going to end this. I'm just trying to give you an idea of how you have to be prepared. You don't wait until it's time to file. No. Your corporate taxes are due March the 15th, and all the income that you're making in your corporation, you need to report that, but you also need to have a system of knowing what's allowable based on their guidance of what you can write off. All right. So there's another thing that we're doing: corporate structure optimizing and liability positioning. So our company benefits from the structure that is being supported. So, we have multi-divisional operations. Remember, education, consulting, real estate intelligence. Yeah. Real estate intelligence includes the title abstracting. So intellectual property protection. Yep. Contract-based revenue streams. And scalable staffing and intern programs. Right. So strategically, our company, Public Research Inc., should maintain a strong corporate minute record. Why? Because that's going to determine everything. It won't be at the last minute. It'll show when you plan to do this. It'll show when you implemented it, not the last night, the night before taxes were filed, or the night before your audit. Board resolutions for major decisions and documented IP ownership. Very important. And then clear separation between corporate and personal assets. See, this type of strategy will strengthen you to be prepared for any time. Your audit readiness will be through the roof. You'll be prepared, and it'll protect your company's or your corporate assets and it ensure all your deductions are defensible. Okay, so you see how I divided all of that up into to compartments, into divisions. So now you can take a look at the revenue that's coming in. Even in the AR, each company or each source or resource of revenue has its own tab in my AR. Yes. All right. So one more thing, and then I'm going to stop right there. Workforce and contractor tax strategy. That's that Secure 2.0 alignment. So because we actively hire interns and contractors, Public Research Inc. can leverage. And we do that with a variation of independent contractors and interns, not just here, but in other places, in other states. Yeah. So we've got tax credit for training. I kept begging you guys to get interns from the different schools and universities in your area. Hire interns because there's an employer tax credit for the training that you give them, because your training takes time, and time is a certain type of money. You can't equate it to money because time is priceless, but there is a certain amount of money that is implied when you use time to train, and because of that you can write it off. Workforce development is another form of write-off, and I already talked to you about retirement incentive for people that you have as employees under the Secure 2.0. There are credits for establishing or expanding your corporate retirement programs. Again, you can do it for yourself. Yeah, as an employee. If you don't do it for anybody else, you can do it for you. And then there are tax advantages and compensation structures for key personnel. So what's the impact? This reduces tax liability while at the same time you're strengthening your talent pipeline and your retention strategy. All right, so I'm just going to breeze through a few more. Capital expenditure timing and cash flow management. So there are certain tax cycles where you can maximize your deductions and maintain liquidity. And you want to find out what that is, because per state is different, right? But there are certain expenditures that you can maximize in during that tax cycle. This way you can ensure predictable cash flow and optimize the year-end tax position of your company. So for our company, we strategically time technology upgrades, studio equipment, and okay, let me give you an example of what I mean by studio equipment. So, I don't just use Zoom, right? I use StreamYard, I use other streaming platforms as well, and they're not free. I'm not talking about YouTube. You see it on YouTube, but I've done other things along the way to get it to that point, and those things are paid services. But those are things that can be written off. Technology upgrades, studio equipment, software subscriptions, office improvements, and digital platform investments. All of those things can be written off. Yep. Okay, so we'll stop right here. Let me mention one more: multi-state nexus and real estate related tax considerations. Okay, so because our work spans from Alabama to Tennessee to other states, multi-state real estate research, then Public Research Inc. has to monitor our nexus exposure, the multi-state and the state level corporate obligations and revenue sourcing rules for the variation of states. And that's something that you want to remember that you need to do too, because several of you work in a variation of states. And at some point, you're going to start getting vendor contract opportunities and procurement awards in a variation of states. You want to keep your eye on the nexus exposure, meaning that you want to check out the multi-state corporate tax obligations and advantages. Yeah, that's going to be really, really important. And this way you'll prevent any unexpected tax liabilities. Yeah, that would position your company, to owe money or of some type. So that's real important. I want to make sure that you're putting yourself in a position that's going to protect you. I see that you're making money, and it occurred to me you may not be implementing your tax strategies. And it's important that you start that before the year begins, so you already know what it is that you're going to do to align, so that each time you have revenue coming in, you already have a set way to write off or deduct most of that incoming revenue. That's the name of the game. Yeah, to bring in revenue, but to already have a strategy to position your corporation to write it off, to be able to deduct it. Okay. Okay. And we're not even talking about the business luncheons and dinners, the business trips. So if you go to a particular area and you attend industry specific events, it could be just for a certain amount of time while you're there, maybe an hour each day, but you get a copy of the program, or you get a copy of the ticket or the agenda, and you keep up with that and the date and the time and your registration or something that shows that you were there, you can write that off. If you go to a restaurant and you have taken someone with you in your industry and you're actually discussing business, you can write that individual's name or that particular meeting down on the back of the receipt and retain it, so that you'll be able to write it off, but you'll also be able to substantiate that it was a business luncheon. And this is how I know, because I was at lunch or dinner with this particular person in this place. We discussed this particular operation, or I was at this particular event. Yes, I went to Chicago. Yes, but while I was there, I attended this, this, and this. Yes, I went to Orlando. I know I went to Disney World while I was there. But for the most part, I attended this meeting, and this meeting involving my industry. Yep, I went to the Florida Land Title Association, and we had a meeting each day. Yeah, for an hour a day or 2 hours a day. Yes. And I can now write this trip off because it was a business trip. These are things that you have to keep up with. When you purchase gasoline and you know that your car is also a part of your company's inventory and you use it for business, then when you buy that gas, what was it for? What trip was it for? What procedure was it for inside of your company, inside of your industry, to go meet with the customer so that you can do their event design? You can write that off. It was a business meeting. Yes. Treating taxes as a strategy tool, not a compliance burden. It's a tool to help you offset the income that you're making. It's going to help you leverage your corporate structure and reduce liability and increase your profitability, because the more you can write off, the more of a tax credit you get, and it'll be a benefit to you. Okay. All right. So just as what our company does, we classify all of our curriculum and development as R&D for full expenses. That includes writing, filming, editing, digital production. We implement corporate retirement plan, even though it's just for me, under that Secure 2.0 credit. That's going to reduce our tax liability, and it's going to strengthen our workforce. We maintain strict corporate documentation and board resolutions. That's going to protect us. And we conduct multi-state nexus review annually, just to make sure that whatever consulting or work we're doing cross regions, as we expand, we're also in compliance. And we align capital expenditures with tax planning windows so we can maximize deductions and protect our cash flow. We maintain audit-ready digital assets and software documentation, essentially for technology-driven corporations like ours. Okay? All right, so I'm hoping that this helps you. The whole reason for this was to make sure that you understand that you are making money now. And because you're making money, you have to be prepared to offset the cost of making that money. And one of the costs is taxes. And the way that you can reduce your tax load is by strategically preparing before you even go into the year. You've already got a strategy for it. Now, there's going to be a module again in the school community. It'll be in the classroom, and it's going to be entitled Corporate Tax Strategy. So that's real important. I want to make sure that you're putting yourself in a position that's going to protect you. I see that you're making money, and it occurred to me you may not be implementing your tax strategies, and it's important that you start that before the year begins, so you already know what it is that you're going to do to align, so that each time you have revenue coming in, you already have a set way to write off or deduct most of that incoming revenue. That's the name of the game. Yeah, to bring in revenue, but to already have a strategy to position your corporation to write it off, to be able to deduct it. Okay. Okay. And we're not even talking about the business luncheons and dinners, the business trips. So if you go to a particular area and you attend industry specific events, it could be just for a certain amount of time while you're there, maybe an hour each day, but you get a copy of the program, or you get a copy of the ticket or the agenda, and you keep up with that and the date and the time and your registration or something that shows that you were there, you can write that off. If you go to a restaurant and you have taken someone with you in your industry and you're actually discussing business, you can write that individual's name or that particular meeting down on the back of the receipt and retain it, so that you'll be able to write it off, but you'll also be able to substantiate that it was a business luncheon. And this is how I know, because I was at lunch or dinner with this particular person in this place. We discussed this particular operation, or I was at this particular event. Yes, I went to Chicago. Yes, but while I was there, I attended this, this, and this. Yes, I went to Orlando. I know I went to Disney World while I was there. But for the most part, I attended this meeting, and this meeting involving my industry. Yep, I went to the Florida Land Title Association, and we had a meeting each day. Yeah, for an hour a day or 2 hours a day. Yes. And I can now write this trip off because it was a business trip. These are things that you have to keep up with. When you purchase gasoline and you know that your car is also a part of your company's inventory and you use it for business, then when you buy that gas, what was it for? What trip was it for? What procedure was it for inside of your company, inside of your industry, to go meet with the customer so that you can do their event design? You can write that off. It was a business meeting. Yes. Treating taxes as a strategy tool, not a compliance burden. It's a tool to help you offset the income that you're making. It's going to help you leverage your corporate structure and reduce liability and increase your profitability, because the more you can write off, the more of a tax credit you get, and it'll be a benefit to you. Okay. All right. So just as what our company does, we classify all of our curriculum and development as R&D for full expenses. That includes writing, filming, editing, digital production. We implement corporate retirement plan, even though it's just for me, under that Secure 2.0 credit. That's going to reduce our tax liability, and it's going to strengthen our workforce. We maintain strict corporate documentation and board resolutions. That's going to protect us. And we conduct multi-state nexus review annually, just to make sure that whatever consulting or work we're doing cross regions, we are, as we expand, we're also in compliance. And we align capital expenditures with tax planning windows so we can maximize deductions and protect our cash flow. We maintain audit-ready digital assets and software documentation, essentially for technology-driven corporations like ours. Okay? All right, so I'm hoping that this helps you. The whole reason for this was to make sure that you understand that you are making money now. And because you're making money, you have to be prepared to offset the cost of making that money. And one of the costs is taxes. And the way that you can reduce your tax load is by strategically preparing before you even go into the year. You've already got a strategy for it. Now, there's going to be a module again in the school community. It'll be in the classroom, and it's going to be entitled Corporate Tax Strategy. Yeah, Corporate Tax Strategy. And that's going to help you. Now, it's labeled public research because it's actually a sample of what it is that we do. I made this one personal, but you'll be able to see it in the Easy Corporate classroom, and it's your test as well as your curriculum as well. I don't want you to think it's just for the title company. No, no, no. This is for everybody. Yeah, this is for everybody. This is for the Easy Corporate side. Yeah. So in this, the Easy Corporate side has franchise unit. You take them both. Yeah, you take them both. It's really important um, that you take both of them in order to complete your package, your um, franchise package, so that you have all of it. That's all a part of you. Okay. And then those of you who want to take a look at the homeownership pre-planning, that curriculum is to help you as a business owner once you become interested in purchasing real estate. Okay. So just making sure that you understand the whole purpose of it all. All right. All right. So look for that in your, because it is required curriculum. But I wanted to just come on and let you know why it was required and why it is important. It's got like 43 different 43 different. Let's see if I can share my screen. I'll show it to you. Let's see. Is that the right one? Share it with you real quick. See if it's in here. If you can see it. All right, I'm not going to put it on presentation mode, but I'll just peruse through here so you can see it real quick. All right, so it's giving you an overview of what we're looking at: corporate education, real estate intelligence, strategic business development. Now it's going to walk you through all the things that I just talked about, the different things that we focus on personally. So I wanted to give you a personal account so that you would have that as an example of how you're going to be looking at your company and what you need to do to position yourself strategically so that as you're making the money, and you're already setting up a strategy to protect yourself and to maximize but this is all based on how our company is run so that you can get a clear picture, because for the most part a lot of you understand how our company is run. So if you understand that, then you understand what we're doing to write off different revenue that we have coming in. All right, and I'm breaking it down to you, everything that I just talked to you about. All right, then we go down here to a different module, and we're talking about asset compliance. All right. All right, just to give you an understanding, we're talking about different tax principles that are involved, right? And this is just general for everyone. So I take you through an example of what we're dealing with, and then I show you some of the strategies that are available to anyone. All right. And then this is your exam. This is your exam here. All right. Explain the difference between tax preparation and tax positioning. Yeah. Why does treating tax strategy as a 12-month corporate discipline determine whether your business grows or stalls or collapses? All right. So anyway, all of that's in there to help you. I want to make sure that you have this. And this is in the Easy Corporate Management second edition that's coming out. I'm teaching it to you guys now because you're making money now and you need to know this, right? You need to understand this. Even the cost that you are using for this course, it is financial expenses that you can write off. Okay. All right. Okay. So Hope that gives you a general idea of what I've been speaking to you about. I'm going to end right here. And I want to make sure you understand our whole purpose is to help you to formulate. We're helping you to get into position, literally helping you to incubate as you are growing, right? But at the same time, we're also setting you up in some programs for some of you who are part of the course, who have been a part of the course, who almost completed the first part of the course, the first edition, or have completed it. And we're now working with you to accelerate your business. That means with finances, that means with credit, that means with certain big ticket purchases, government contracting. All of that is what we're helping you to do now at this point. You had your incubation period. We got you all set up in a variation of areas, even got you, some of you with clients, right? Now we're accelerating you. So we're serving